And that's when the hell I realized they're not just shorting Bitcoin, they're hunting Michael Saylor like a damn wounded gazelle. MicroStrategy crashed 67% from all-time highs. That's 50% more than the asset they're holding. They've got 714,644 Bitcoin on the books. Current damage, 5.3 billion in losses. The math's screaming one thing, mate. Someone's engineering this damn collapse. And here's the kicker. Their latest purchase, 1,142 Bitcoin for $90 million, was their smallest buy of 2025. That's not accumulation, old sport. That's a cash flow problem. This isn't market volatility. This is a coordinated liquidation hunt. The banks aren't waiting for Bitcoin to crash. They're engineering the conditions to force Saylor to sell. And when he does, they'll be there with their checkbooks, buying your Bitcoin at a 40% discount while you panic sell into their arms. Right now, MicroStrategy can survive Bitcoin dropping to $8,000. But here's what nobody's telling you. The banks don't need Bitcoin to hit 8,000. They just need you to believe it will. Stay with me, because what I'm about to show you is how they turn a debt instrument into a liquidation guillotine. In the next 13 minutes, I'll show you exactly how convertible bonds become a weapon, why the premium collapse is the real story, and 5 strategies to avoid becoming exit liquidity for BlackRock. Let's jump right in. But first, you need to understand the deception. The deception's not Bitcoin volatility, that's too obvious. The real deception is Wall Street's playbook for engineered liquidation events. They've done this before. Long-term capital management, 1998. Bear Stearns, 2008. Archegos Capital, 2021. The pattern's identical. Leverage up an asset, wait for volatility, apply pressure through debt instruments, force liquidation, buy the wreckage at a discount. Michael Saylor's just the latest name on the hit list, and this time the weapon of choice is convertible bonds. Wall Street's not your partner, they're the house. And the house always wins, unless you see the game before it's over. There's a specific mechanism in MicroStrategy's convertible bond structure that essentially gives Wall Street a loaded gun pointed at Saylor's Bitcoin stack. I'll show you exactly how it works in a few minutes, but first, you need to understand just how catastrophic the damage already is. Here's the math that will make you piss yourself. MicroStrategy used to trade at a 300% premium to their Bitcoin holdings. You were essentially paying $4 for $1 worth of Bitcoin, and blokes were lining up around the block like it was the new iPhone launch. Now, you're paying 85 cents for a dollar's worth. That's not a correction, mate. That's a liquidation signal. Why does this matter? Because MicroStrategy funds their Bitcoin purchases by selling stock. When the premium collapses, their money printer breaks. They can't sell stock at inflated prices anymore. So what do? They issue convertible bonds. Think of convertible bonds like this. It's a loan shark who not only charges you interest, but also gets to bet against you at the casino. If you win, he gets his money back, plus interest. If you lose, he takes your house and gets to buy it at a 50% discount. It's the financial equivalent of your mate saying, "I'll lend you $20, but if you can't pay me back, I get your car." Except the car is Bitcoin worth $49 billion. Right. So how the hell do you know if this is about to blow up? 3 things you can check right now before this video ends. First, Google MicroStrategy Premium to NAV right now. If it's trading at a discount, negative number, retail is panicking. If it's positive, confidence is returning. Right now it's at minus 15%. That's peak fear. Bookmark that number. We'll come back to why it matters. Second, set a price alert on your phone for Bitcoin at $60,000, not because you're going to panic sell, but because that's the psychological level where Wall Street expects you to capitulate. If we hit it, you'll know the pressure campaign is working. Don't be the one who sells them your Bitcoin at exactly the price they're hunting for. Third, put MicroStrategy's next earnings call on your calendar, February 18th, 2026. That's when Saylor has to publicly disclose how much runway they have left. The shorts are circling that date like sharks. If you own MicroStrategy stock or Bitcoin, that's when volatility spikes. Prepare now, not when CNBC is screaming about it. Now let me show you how convertible bonds become a liquidation weapon. MicroStrategy's got $8.2 billion in total debt. $1 billion of that comes due in 2027. They've got $2.3 billion in cash. That's 18 to 20 months of runway if Bitcoin stays flat. But here's the trap. Those convertible bonds aren't just loans. They're conversion options. If MicroStrategy's stock price drops below a certain threshold, bondholders can convert their debt into equity at a discount. That means dilution. Massive dilution. And who holds those bonds? Bloody hedge funds, the same hedge funds shorting the stock. So here's the brilliant cruelty of it. They lend MicroStrategy money through convertible bonds, then short the stock to drive the price down, which triggers the conversion clause, which dilutes existing shareholders, which drives the price down further, which forces MicroStrategy to issue more bonds or sell Bitcoin to cover debt. It's a debt spiral disguised as a financing strategy. This isn't economics, this is engineering. They've built a machine that profits whether Bitcoin goes up or down as long as MicroStrategy's stock collapses first. Michael Saylor is essentially playing the most expensive game of chicken in financial history. He's got $54 billion in Bitcoin, $1 billion in debt due in 2027, and the entire traditional finance system circling him like vultures at a buffet. Respect to the bloke, but this is like watching someone try to outrun an avalanche on a unicycle. Alright, let's do this. Pause the video and check your portfolio right now. If you own Bitcoin or MicroStrategy stock, ask yourself this question. What's your exit plan if Bitcoin drops to $60,000 tomorrow? If your answer is panic sell, congratulations, you're exactly who Wall Street is hunting. If your answer is buy more or hold, you might actually survive this. Write it down, because what I'm about to show you next will test that conviction. Let me show you how deep this rabbit hole goes. Wall Street's strategy here is brilliant in its cruelty. They don't need to beat Bitcoin. They just need to outlast Saylor's runway. It's financial mixed martial arts. He's throwing haymakers. They're checking their watch. How's your cash flow, Michael? Need another ATM offering? We'll wait. In the last 90 days, institutional short interest in MicroStrategy increased by 47%. That's not speculation, that's coordination. Someone is placing very large bets that Michael Saylor fails. And here's the part that should absolutely terrify you. They've done this before. This is the exact playbook they used on Archegos Capital in 2021. Lend them money, let them lever up, apply pressure through margin calls, force liquidation, buy the assets at a discount. Bill Hwang lost $20 billion in 2 days. MicroStrategy's got $49 billion in Bitcoin on the line. The banks need you, yes, you watching this video while working from home in your underwear, to panic sell your Bitcoin at $65,000 so they can accumulate at a discount. You're not the customer in this transaction, mate. You're the inventory. So how the hell do you escape this trap without becoming exit liquidity? Listen very closely, because this next part could save your portfolio. Here's your game plan. Strategy 1, the time horizon defense. Extend your time horizon beyond Wall Street's quarterly earnings cycle. The shorts are betting Saylor runs out of cash in 18 to 24 months. If Bitcoin recovers before then, they get squeezed harder than a tube of toothpaste at a budget hostel. Your job? Don't donate your Bitcoin to their accumulation strategy. If you believe in the long-term thesis, volatility is noise. The banks are trying to shake retail out at 60. If you're dollar cost averaging, this is the equivalent of your favorite stock going on sale. They're creating the dip. You don't have to buy it. Strategy 2. Watch the debt maturity calendar. MicroStrategy's got $1 billion in debt due in 2027. If Bitcoin is above 85 to 90,000 by mid-2026, the pressure evaporates. The shorts know this. That's why they're applying maximum pressure now. Mark your calendar. February 18th, 2026. Earnings call. Q2 2026. Debt refinancing window. If Saylor can refinance that billion-dollar debt without diluting shareholders, the short thesis collapses. Pay attention to the dates. The market moves on calendars, not emotions. Strategy 3. Understand the premium as a sentiment indicator. The MicroStrategy premium to net asset value is now a fear gauge. When it trades at a discount, retail is panicking. When it normalizes, confidence is returning. Right now, it's at minus 15%. That's peak fear. And peak fear equals peak opportunity for patient capital, if you've got the stomach for it. Here's the historical pattern. The premium bottoms when Bitcoin bottoms. When Bitcoin starts recovering, the premium snaps back fast. In the 2022 bear market, MicroStrategy's premium went from minus 20% to plus 50% in 3 months. If you're watching the premium, you're watching the fear gauge in real time. Strategy 4. Don't confuse volatility with failure. Saylor's strategy isn't failing. It's being stress-tested by the most powerful financial institutions on Earth. There's a difference. One is a death spiral. The other is a siege. Know which one you're watching. MicroStrategy disclosed they can survive Bitcoin dropping to $8,000. $8,000. That's an 88% drop from the all-time high. They've got runway. The question is, do the shorts have enough capital to outlast him? Because here's what Wall Street doesn't want you to know. Shorting is expensive. Every day they hold those positions, they're paying borrow fees. Every day Bitcoin doesn't collapse, they're bleeding money. This is a war of attrition, and wars of attrition are won by whoever has the deepest pockets and the longest time horizon. Strategy 5. The liquidity ladder for Bitcoin holders. If you own Bitcoin directly, not through MicroStrategy, here's your survival framework. Don't sell into panic. The entire point of this pressure campaign is to make you the exit liquidity. If you're selling at 65,000 because you're scared, you're handing your Bitcoin to BlackRock at a discount. Instead, ask yourself, has the thesis changed? Is Bitcoin still scarce? Is adoption still growing? Are institutions still accumulating? If the answers are yes, then the price is noise. If the answers are no, then reevaluate. But don't let Wall Street's psychological warfare turn you into their exit strategy. This isn't financial advice, it's survival advice. The banks built this trap to profit off fear. You just learned how the trap works. Use it. The trap's been exposed, the playbook's been leaked, and you're now in the top 1% of Bitcoin holders who actually understand what's happening. Most people will screenshot these 5 strategies, save them, never look at them again. Like gym memberships. Like that book you swore you'd read. I believe in you, though. You now know what Wall Street doesn't want you to know. You've seen the playbook. The question is, what are you going to do with it? If you know someone afraid of the Bitcoin volatility, send them this video. You might just save their portfolio. If this was helpful, drop a comment. The next piece of the Bitcoin protection strategy is on screen. The shorts are watching, the banks are hunting, but now so are you. This has been the Wealthy Gent. Stay wealthy, stay skeptical, and remember, Wall Street doesn't negotiate, but you can damn sure outplay them.